Hi everyone and welcome back to today's morning report on Tuesday the 15th of December with me, Richard Perry, market analyst at Antech Markets. Let's look at Eurodollar now, and this is the sort of 10-month chart of Eurodollar. You can see over this course of this chart, you can see some important turning points actually, and I still think that 1050 to 11 figure is a big pivot band that is in play. And again, if you zoom in, you can see that it's coming into place once again. 1050 to 11 figure, it seems to be again forming that role where the overhead supply and the pivot band at 1050 is holding back the gains. Now we've had a poke at 1050 today, 1059 in fact, and you would still say that there is a bullish bias going on in Eurodollar. I mean, if you look just generally speaking, what's that, 6-7 days in a row where you've seen 6 days in a row now you're seeing higher lows, so you are still on a bullish bias, and you've got the momentum indicators which are still reflecting that. But that overhead resistance at 1050 is still in play, and again we had a poke today and it's fallen away about 30-40 ticks lower. Now again on the hourly chart, you've got a sort of bullish bias without being overly bullish, and that is suggesting to me that I think the market is going to struggle to make a move above 110.50 in front of the Fed. I don't think that's necessarily going to happen, and even then, I think if it did, I think 111. I think between 110.50 and 111 there's a big band of resistance that I think will contain any such move, and I don't think that the euro is going to strengthen demonstrably in front of the Fed meeting. You've also got the inflation data today, so that is likely to create some volatility near term, but again I don't necessarily think that that's going to be something that drives euro dollar strongly through this 110.50 to 111. So I would be thinking that anything back towards 110.50 is likely to start to be sort of come under a little bit of not selling pressure, but just maybe a bit of profit taking, because I don't think the market is going to be pushing it strongly higher, and that's my sort of inference from all these indicators, where there is, as I said, a bullish bias, but I don't necessarily think it's going to be pushing strongly higher. I think it's going to consolidate probably around that 110 area in front of the Fed. I don't think it's going to be seeing any sort of real correction, but I think that it's not going to be pushing strongly higher. So in front of the Fed, that would be how I'd be looking at a euro dollar. So I wish you good luck in your trading today, and I will speak to you later.